Hello, I'm Jason Strongahead. Usually in the month of March, it's where a lot of people, a lot of job seekers will be going to the market and look for a new job because after many employees got their bonus, they will leave their job and go and look for a new pasture. So this year, I don't think a lot of people will be leaving their job because of the global outbreak. So many people are now very worried and they do not know whether they will be able to even secure their current job. And many of the companies, because they're going to be taking a traditional and conservative approach, so many companies probably is not going to hire, or they'll be now having hiring freeze because they do not know this global outbreak, what is going to be happening next, and how long will this outbreak last. So what can you do? You can pick on a new skill, in my opinion, right? So for instance, you can study something about financial market and go and understand, right, how come some people can make so much money from the stock market. And if you do some research, if you look at Warren Buffett, if you look at Mark Zuckerberg, if you look at Bill Gates, they are one of the richest people in the world. Their value will never go up without investing in the stock market. So therefore, do you think that stock market is one of those tools, right, that will empower you to be successful? If you believe so, then this episode that I'm about to share with you will probably be worth your time. So we cannot always stay foolish. There are some things, right, that we need the knowledge in order for us, right, to profit from it. So in this time of turbulence, a lot of people will be very, very conservative and pulling back. I would think that this is actually a good time for you to accelerate rather than pull back. And in order to accelerate, you cannot just want to stay positive and go for it, you may die, You need to understand, right, what kind of risk that you will be facing and what will be the kind of terrain. So in this particular episode, I would like to share with you what are the things that you want to look at, and you should be familiar with what are the historical data and how can you use history that will allow you to take advantage of the situation today. Then if that interests you, I want you to stay and watch this all the way. Yeah? Now, before we talk about all the things that I want to talk about today, I want to just ask your opinion. So I've been wondering what would be the kind of jacket that would look good on me. So is it going to be maybe this color jacket over here? Color jacket over here? Or the black color one? Yeah, the black color one. So I think, let me show you how the black one will look like. So is it the light color one or the black color one? Which one looks better? Yeah. So is it the light color one or is it the black color one? Yeah. Which one looks better? The answer is, I'm not going to wear any anyway, right? Okay. Because I'm most comfortable in my casual t-shirt, and also I'm not a professional over here. So whatever that I'm about to share with you about the market, it's just my point of view, my opinion. If you really want to stay invested in the market, please seek for professional advice. Yeah? Whatever that I'm about to share with you is just my opinion for entertainment purpose, for education purpose. Are you ready for what I have to share? What if the market is really, really bearish? A lot of people are very scared and it's going to come down again. So let's take a look at the second line of defense. Yeah? The second line of defense is over here. See? When the price went up, drop, bounce again, up, drop, bounce again, up, drop, bounce again, up, drop, bounce again, bounce again. So this area will be the second line of defense at about 2,370-700 points. Okay? What if it is the worst case scenario? Of course, the worst will be the whole market crash under zero, right? Which I don't think will happen. Okay, so if you look at the third line of defense, the third line of defense will be about 20,500 points, about there. Okay, which is back all the way to 2016. There's another support over here, okay, which this support has not been seen for the longest time. So if really the market is damn bearish and it comes to here, this is really considered like the great stock market sale. I think a lot of people are going to go here and buy. So if you look at the market, yeah, for the last few days, right, the market has really come down by a lot. So if you look at the shaded area, so it has come down into the bad territory. Wow. And a lot of people are thinking like, what is going to happen next? Now, when you zoom in and only focus on the recent happening of what the market is doing, yeah, it's very hard for you to get a clear point of view. So if you look at it, Every time when you are looking at something very near, this is what you may see. You may be looking at a picture that is showing someone on the plane looking outside of the window. However, when you zoom out, you always get a better picture. So I thought this would be a good joke. You see, when you zoom out, actually it's not a person sitting on a plane looking outside the window. It's just a person staring at the monitor, looking at the mark, on a year of the mark, and it gives you the false illusion. I'm not saying that the market is showing you any false illusion. What I'm saying is that if you want to understand what the market is doing, you must always look at the bigger picture, a longer time frame. Don't just look at something that is very, very short time frame. Because in the shorter time frame, it looks like the person is drowning. But only when you look at the bigger time frame or the bigger perspective, then you realize that actually the person is not that deep in the water. So if you look at the market right now, yes, the market may be down a lot, okay, from 2,900 points to about from about 29,000 points down to about 21,000 down. However, if you look at the long time frame, it's not that bad, right? Can you see this dip? It's not that bad, right? Okay. So maybe now the question should be, how low can this market go? So if you look at the historical data again, right now the market is here. So if you look at the previous really bad market that has went down a lot, it's in 2008. So if you were to compare between the two, of course the 2008 one looks a lot worse. So if you think that the percentage of drop should be about the same, then this is how you can do a speculation, right? So if I were to delete this box and I were to replicate this box and move up, because it's the same percentage drop, right? So if I move out over here and I place it here, so now let's take a look at the market again. So if you think that the market will have the same plunge, that means, right, we are looking at about 13,500 points, about that. Yeah, so you'll be about more than slightly more than 50% plunge. Okay, and if you think that is the worst case scenario, but if you believe that it is very bad, some of the news are saying that this plunge is the equivalent of the Great Depression. Okay, so if you think that it is similar to the Great Depression, so if you look at the overall historical chart, this is where the Great Depression is. Yeah, the Great Depression, and it's a big plunge. So if you use this and put it as a gauge, then this is what I will do, right? So I will do the same thing. Okay, I will replicate and move this box over here. And if you think this is going to be the plunge, so let's take a look. Hang on. Okay, let's take a look. Okay. All right. So if you think this will be the plunge, then if this is really that bad, you will go down all the way to Dow Jones 3,162 points, around that zone. Wow, that's a very deep drop. Okay, so it will make everyone believe that the world is coming to an end. Now, so if you believe in that, then yeah, so be it. If you think that this is not possible, this is more possible, then yeah, it's your take. Yeah, you will never be able to predict the market, but you can use historical data to help you develop a point of view, and therefore help you to make a decision. So your decision to go into the market or not go into the market to assess your risk. Okay, so for me, I will always use historical data to give me some indication about what the current situation might be like. We will not be able to predict 100%. Yeah, no one can do that. We can only use historical data to help us understand the probability of it going down, and if it goes down, then how low can it go? And from there, we assess our risk. So I don't think we're gonna be going as bad as the Great Depression, that one. I don't think so, okay? But I may be wrong, of course. Just that, in my opinion, I don't think so, yeah? So if you look at if you compare apple to apple, not just the price action, if you compare the incident, right, this Black Swan event, and then the Great Depression, and then the 2008 Lehman Brothers collapse, okay? In terms of the hit, the impact, I don't think this impact, I'm not saying this impact is not big. Okay? It is bad, but I don't feel it is that bad. Yeah, I don't feel it's that bad. So because of that, I think even if the action were to mirror the previous historical events, I don't think it will be like the Great Depression. I think it's going to be more, maybe, yeah, the worst case scenario should be more like the Lehman Brothers, like 50% down. Okay, so if you don't think it is going to be that bad, and then what would be the next level, right, that we are looking at? So if it's not going to be 50%, if it's just going to be about 30 to 40%, okay, so I remember all these red color line that I've shown you in my previous videos. So in the previous video, I mentioned that when the price hit this level, there's probably going to be a bounce. So over here, that was the first level that I predicted, right? Okay, this was the next level. And I mentioned there was a last line of defense. I don't know if you all remember before. My last line of defense was here. So the moment price hit there, what happened next? It bounced, right? Was it going to go down lower? I don't know. Okay, seems like so far, all this level of support, it doesn't help to give the boost a confident level that the price is going to go back up. Yeah, so far lah. Huh? So let's say it's going to come back down even more. Whatever that happened last Friday, probably is just temporary and it's going to go down more. Let's just say. Okay, so which will be the next level? I think the next level that it can go down, it will be slightly below about slightly below 20,000 point. Okay, about 19 plus thousand point. At this level, probably there will be another bounce. But if you look at all this support level, it's not really much tested before. So even if it really hit, there's a high chance that you will break. Yeah, and if it really breaks, then we don't know. We have the access again. Looking at the longer time frame, then we have the access again. Okay, where do you think it will be? Is it going to hit all the way to the 6,000 point? Or is it going to be slightly above the previous high? Okay, before the plunge in 2008. Yeah, so all these are the possible area. So if you are looking to go into the market, yeah, so you can always look at all these area to help you decide, right, which will be the point, the price point that you feel you will have it will be more comfortable for you to hold on to the risk and go into the market and just sit there and wait. Yeah. However, I don't think that it will be wise for you to go in short term. And if you are going for the longer term, probably the chances of you winning will be higher. Now, why is that so? And I will show you why is that so in probably the next video. Yeah, so stay tuned. If you like whatever I'm sharing with you, please remember to subscribe to my channel on Jason Stronger Head and click like if you like the video.